Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Yesterday I went a little overboard. I'm going to try and not do that today. Let's just try and make this a nice, simple 10-15 minutes. That's crazy, Brian. I was really touched today. It was super, super cool. I put out a tweet earlier today saying, if anybody's watching these free videos, YouTube, but we've done a really, really great tutorial walkthrough on how you can use RSI. I just got to find the damn chart. I thought I had it on here. And that whole premise of maybe it's over here. The whole premise of using RSI to try and help you frame expectations in the market. And I don't have it here. Well, they put the damn chart. Of course, today's been an interesting day for Brian, and I don't expect any empathy from anybody on this. We had our get together with the boys last night, and unfortunately, I got a little bit polluted. So it's been a bit of a challenging day for Brian. That's certainly no excuse, and I'm not trying to blow smoke up your butt. But if this video today's a little bit wonky, please bear with me. Here's the chart I wanted to show you. Yeah, here. So this was a 4-hour chart we were looking at yesterday, sort of walking through the bull run and using multiple W's and which W is coming in to frame expectations. And yesterday I had sort of said that, hey, we're in sort of our blow-off move on RSI. Be careful here. If we get any sort of M's, it's just telling you, hey, cool your jets. It doesn't necessarily mean it's a sell signal, and that's super important. Just simply means that, number one, usually the third leg in RSI, when I like to draw them in purple, that's sort of a warning sign that, hey, you know what, this move's getting a bit old. And then if you get an M that develops up top here, and especially with RSI above 70, technically that's supposed to be overbought. That's just simply a message, hey, just cool your jets, right? And the interesting thing about that event was that message basically came in right at a profit objective. So interesting enough, the people that took this trade on Bitcoin, actually this is pretty much par for the course. So hopefully you rung the register, all those lower time frame players, you got paid nicely. And the sad thing is who's coming in and buying up top here? We know it's the public, right? And also too, this is a really good lesson about kill zones, right? This was a New York liquidity window, and of course it was a trap. This doesn't necessarily mean that this is a sell, but this M up top here just simply means, hey, just cool your jets. Also notice too, we got a bit of an M in OBV. That's not good. But I wanted to just mention that I thought this was, this is a really, really good module. It's free, that I've basically taught everybody on the net. And what I was really, really pleased to see, it just filled my heart, was that people are actually listening. They're hearing the message. I'm trying to make a positive difference in this world. I don't really know much. I happen to have fallen in love with the market a few decades ago, and I live, eat, and breathe the market and price action and stuff. Is this the way that Brian gives back to the universe to try and make a positive difference? If it does help you, then I've done my job. This is what I'm supposed to be doing here. So like I said, I put this out. If you saw that M in RSI, you should know exactly what I'm thinking. And I mean, this kind of, I don't know who you are, Asha, but this just, it could almost bring me to tears. Because this is exactly what I want, and I'm trying to make. Sorry, I gotta get myself together. Sorry about that. I'm trying to make a positive difference in this world, and and it's, the message seems to be getting out. So it filled my heart, made me feel really, really good when I saw this morning. So thank you, and thank you for believing that I might actually have some information that might be able to help you. That's the whole point of this. Okay. Oh, Brian, what a mess I am today. Where do we like to have a conversation with you guys? I like to keep the message relatively simple for this. It's supposed to be 10 minutes, but I got a feeling it's going to be another 20, 30-minute rant here. Sorry, everyone. In our sort of hegemony world, Soviet America, where the bankers tell you how to bank. You don't tell the bankers how to bank. Well, whatever. U.S. dollar index is still sort of driving the bus in the world. So, whatever the U.S. dollar index is doing, that's probably going to set the tone for the market. We did come off precipitously out of the summer as people were feeling a little bit more optimistic about the world and capitalism, capital, and all that kind of fun stuff. Came right back down against the bottom end of the range. Interesting how we did not fill this gap in, though. Still some unfinished business down there, folks. We then rallied right back to 38.2s, which is pretty normal. That's what we call it, our first stop target. It's usually what markets like to do on dead cat bounces is come back to this 38.2. Also notice, too, is that a trend line as well. So big battle here. Battle. Who's going to control? And, of course, interestingly enough, I suppose in hindsight it makes perfect sense. We head into... technically, the United States of America is in a bit of a questionable window right now. Leadership obviously is very weak, and some politicians are trying to throw other politicians out of office, which of course doesn't set the backdrop for confidence. And so, what a surprise! We're actually seeing money sort of coming out of risk and fleeing into the U.S. dollar. Stock markets kind of wavered there a little bit. I've said this repeatedly. I actually think the stock market should have come down more through this window, but very, very strong January barometer readings. And interestingly enough, you can even see today, they might even take back this whole damn sell-off here in a heartbeat. If risk is feeling like it's coming back on, and maybe that's sort of like resolution of that whole, impeachment stuff. Just get it done, get it out of the way. Let's have the vote. All right, Republicans control Senate. So, this was a pointless exercise anyway. Just get it done, over with. Let's move on. Of course, you can't write better fiction than reality, so who knows what the hell's going to happen. But I think, interestingly enough, I think the oil actually acted the way that the market was anticipating risk off. We talked lots about conspiracy and Leap's expiry and, $7.5 billion on the line. Was there some market manipulation to keep this thing up at these levels artificially? I think that had to unwind. That's what these two bars was sort of unwinding that artificial level that they bid stocks up to. And, with January barometer kind of readings, I find it really hard to believe that they were actually going to close January negative. So you can see where they opened up January. You can see just very briefly they got a little bit negative and then boom, right back up. So this is a pretty well-defined fail. And like I think I've said, I've kind of cursed myself that I didn't take this. This was a double top fail. This was a fractal. This is an outside-downside reversal. And we've sort of talked about this too. Like what do corrections look like? I think we're in the kind of world where corrections are swift, they're violent, they're extreme, and then, whoom, they take it right back. So be careful in this, I don't really like actually investing too much in years that end in sort of 8s, 9s, 0s, 1s, and 2s because I know that recessions happen around them. I kind of think that they're going to create like a blow-off top scenario and get the public all into the stock market. And then don't be surprised to see some big-ass face ripped moves to the downside to flush everybody out, freak everybody out, panic, and then bring it right back. That seems to be the hallmark of this kind of market. Anyway, it is what it is. So January barometer still pointing up, and we still got a couple days to go. Let's see how this finishes. My hunch is probably finish somewhere right up in this area here. That wouldn't surprise me. Pretty normal. So short term, a little bit of risk offy coming out of U.S. dollar index. Risk offy definitely in the crude oil market. But interesting, we are coming up to February. Buy around the middle of February, sell the middle of May, made money 9 of the past 10 years. This was also a V-top, so we know V-tops like to be tested. If we look at the risk-off assets, interestingly enough, what's going on with gold? I thought gold was supposed to be a big rip-roaring bull market. Something's not right there. I was even more surprised when I looked at the gold stocks. Look at Barrick here, just getting bitch slapped. Ay, ay, ay. Up and down like a horse drawers. Oh, boy. Yeah. Actually, we had a fun time in the Daily Brief today. Brian had to take a potty break halfway through. And I feel as though I think I'm gonna just try and wind this up here. I don't need to go into great detail with you guys. Like I said, I'm feeling a bit delicate here today. So I'm not really buying any gold here. A little bit worried that this thing M's out, and if it does, and that turns into a big happy face, well, you guys all know what happens in happy face scenarios. And considering that they have cleaned the oil out now, so now it does have permission to bottom, be careful on your gold. Still short my bonds. The interesting thing is I would actually make the argument we just came into a shorting location. So how ironic. Yes, I am short. I sort of, I talked to the audience in the Daily Brief today about how, well, I kind of fucked that up. I probably should have rolled out of my position and then rolled into the next one on counter-trend rallies back into new selling levels. Of course, I didn't. Still on my short position, and ironically enough, the market's still lower than where I shorted. But it's an option, so you have to deal with time decay and all that. So I'm a little cross at myself for kind of fucking this up. But at the same time, too, it's just paper. Expiration is months down the road, so it's not like I'm in any big hurry. It's just a little bit of, I left a bit of money on the table there. But anyway, we'll see how it goes. Still don't really like bonds in that I'm worried that the central bankers are going to start manufacturing inflation. ECB's got the green light. I don't like the euro right now. I think that looks horrible, and it's also some of a conversation about the risk-off market. But I guess, probably interest rates are going to slowly rise over time. I guess I'd be surprised if there was a real crash. The whole reason why I'm in this bond trade is good old 50% rules. I mean, that was a pretty big move up. We came down to like 38.2s, 50% are sort of in this area, so that's what I'm still shooting for. It's just a really simple 50% retracement. That was the plan, and that's actually why I took the trade. You can see we came down to it, and then, not quite, Brian. Could we roll over and come back down to it again? I think so. That's sort of my thesis. Oh, God, I keep talking. Shut up, Brian. God, just get on with this. Little stock I was really interested in. I like diversifying my portfolio. So this is a retirement stock that I picked up. These guys happen to be in the super exciting business of death. Wonderful. They're in the funeral home industry. I really like this level. I mean, it might get blasted, and you saw the little pharma stock. It lost its lows, and so as a result, I'm actually working a strategy to get out of that trade now. And it's a trader's life. I mean, there's no guarantees any of this is going to work, but I do have a whole bunch of lows to work with here. And, as I had sort of shown you, this thing's got a long way to come back if it ever decides to get its act together. So, I went and picked up a little bit of this, just basically buying this W right here. We'll see how it goes. And, as I've shown you before, sometimes I go, woohoo! And I'm like, oh, look at at me, I'm so smart. Sometimes they go, ooh, oh crap, now I look like an idiot. I'm not recommending you guys do anything on these videos. You know that. I'm just telling you what I'm doing with my money. I bought the W. I'll risk against this level. If it fails, then I'll try and get out. That's the way it goes. Good old corn. Good old corn. Not really a heck of a lot new to this conversation. I sort of showed you off that lower time frame, 4-hour kind of thinking. That it looked to me like we hit some trading objectives. We're starting to get internals that are kind of saying, hey, wait, slow down. I would personally prefer to see this go sideways for a bit. Wicks and tails like to be eaten, so they got a bunch of trap bulls up there. That was through that New York kill zone liquidity window too. Looks to me like that was also a stop run up there, so really cheeky action up there. And also you can see just in this last 4 hours now we got a pretty nasty tail here that goes right down to 13 EMA. So what I've been just sort of suggesting to people is basically a really, really simple message. I think probably we have a trading range established, top of the range, bottom of the range, and you're probably best just to let this thing consolidate a little bit, let these internal M's play themselves out. And you can see I've drawn on here. What I would actually prefer now that this purple line's busted is I'd like to see the market come back down to this trend line, yellow, put in another little W, right? And then that sets up our next trade. But that's a ways away. And I had sort of suggested to the site people that I'm thinking this is probably going to take a day or two to clean up. I wouldn't even be surprised if this turns into some sort of fractal head and shoulders kind of idea. But there aren't really any new setups for me per se right now. I'm just in sort of cool your jets kind of mode. Was really pleased to see. I like the whole banging out doubles kind of idea. I like getting into risk-free trades as fast as possible. And we had our little Deribit meeting last night, and I can report now that basically we sold half of the little option position that we bought at double our purchase price. So in essence, we have a risk-free trade now on this options trade. I have no idea what the hell's going to happen. Kind of like the bond trade. You see where our 50% rule is. Now, the shitty part about the bond trade is I was only able to buy one, so I wasn't able to sell half on a double. I just have that one position. Whereas this, we bought a whole bunch of them. So as soon as the price doubles, sell half, get your original money back in your hands, and then who knows what the fuck's going to happen with the rest of the trade. And, if the market acts the way that historically and normally does, then we're going to do pretty darn well on the rest of this position. If it doesn't and it goes belly up, then we have no risk. That's a good position to try and force yourself to be in. I learned that lesson easily 30 years ago from old VSC floor traders. As soon as price doubles, sell half. Don't be greedy. Just get your original money back in your hands. If you want to sell a little bit more, right, so that you can see a nice profit on the actual position regardless of what happens afterward, okay. But at least just try and get your original capital back in your hands. That's how I did that whole $500 into $100,000 in 2 years in that crazy-ass crypto market. Is just every time an asset doubles in price, sell half, get your original money back in your hands, and then, the world's your oyster in those kind of scenarios because you just have no risk. You're in the game, but you ain't got any risk. That's the best position to possibly play from. Okay, so that's sort of your summary here today. Not a heck of a lot new to report, either from the corn or, from risk on, risk off. There are some interesting, I like this kind of scenario where a lot of the stock market's selling. People are, coronavirus. I mean, what the hell does that have to do? If anything, that should help the funeral industry, shouldn't it? But use this opportunity that they're bringing stock prices back down into original bottoms. The reason why I wanted to show you that was here's a scenario where I missed the original double bottom. I just was patient, let the market come back down into the bottom, see some sort of signs that, hey, this thing's actually got some life, all right, I'm willing to step in and take a shot. And if they lose these lows now, then I'm done. But I like the idea of just sneaking in here. And now I'm going to let all of these people now defend my trade. So anyway, we'll see what happens. All right, guys, hope you enjoyed that. All the best. Have a great day. And bye for now.